So for the quarter, net revenues grew by 20.3%. They were at 10,319 crores. Net interest income, which is about a little over 72% of our net revenues, were 7,453 crores and registered a growth of 24%. That came on the back of asset growth and a core net interest margin which was at 4.3. Other income, which is 27.8% of revenues, of net revenues, grew by about 11.8%, and those touched 2,563 crores. Sorry, 2,865 crores as against the previous year's 2,563 crores. So there's a growth of about 11.8%. If you look at the components of other income, the largest contributor tends to be fees and commissions, which was at 2,172 crores for the quarter, and that was up 18.4%. And that really is the major component of other income. Operating expenses for the quarter were at 4,584 crores. These grew by 18.9% over the corresponding quarter. What that meant is that the cost to income ratio for the quarter was at 44.4%, which was a marginal improvement as against 44.9% in the corresponding quarter of the previous year. Our total provisions were 662 crores. That was, some of it was specific provisions, about 490. There were general provisions of 160 crores and some other provisions as well of around 11 crores. And after providing for tax, the net profit for the quarter was at 3,374.2 crores, a growth of 20.2% over the corresponding quarter of the last year. Moving on to the balance sheet numbers, our balance sheet crossed 7 lakh crores. We were at 7 lakh 8,000 crores. This is as against 5 lakh 90,000 crores in March of 2015. So the balance sheet growth has also been roughly 20%. Deposit growth was at 21.2%. Total deposits were at 5 lakh 46,000 crores. And that included a pretty strong CASA growth as well, with current account growth at about 20.2% and savings accounts growth at 18.4%. I think you need to see the deposit growth of 21% in the light of the system deposit growth, which has, I guess, been in high single digits. On the loan side, our advances growth was at 27%, touching an advances outside.
I think there's some audio issue over there. We'll just go back to that presser. Amish is still with us. Amish, management also sounded quite confident as always about growth going ahead.
Yeah, I think they've clearly demonstrated, a very strategic way of growing without putting pressure on the capital adequacy or the asset quality, and it's clearly showing in the numbers quarter after quarter.
Right. I think we can go back to the press conference. Let's listen to what the management is saying.
Over 500 branches, 506 branches, and therefore our branch network now has touched 4,520. We are also across we've got about a 12,000 strong ATM network, and our presence is in 2,587 cities. Again, the mix of those branches is more or less similar, about 55% in semi-urban and rural areas, and the rest in urban and metropolitan locations. Finally, on asset quality, actually, asset quality has remained fairly stable. Gross NPAs still remain a little under 1% at 0.94, pretty similar to where we were at 0.97. Again, the fact that the overall asset quality, it's been a challenging environment, but has been more or less stable. I think that's something which has sort of remained for the last several quarters, although we've had a few basis points movement from quarter to quarter in the last financial year. CapAd, overall total capital adequacy was at 15.5. Tier 1 was at 13.2%. Tier 1 has come down from 13.7 last year to 13.2, given the balance sheet growth that we've seen and the fact that last year end was just after the issuance that we had done. So clearly the Tier 1 was at a high in March of 2015. It's at 13.2, which is still very comfortable as far as just Tier 1 is concerned. And of course, total CapAd at 15.5 is way higher than the regulatory requirements. The board proposed a dividend of 9 rupees 50 paisa per equity share of rupees 2. This is again up from 8 rupees last year. So those were some of the key financial parameters, some of the highlights. We'll be happy to take your questions.
Neha Bhotwar from meeting now, sir. Could you tell us a bit about your corporate loan book? Could you tell us a bit about the main areas that saw stress in this particular area and your outlook for the same going ahead?
So in terms of growth on the wholesale side, we have three major segments: corporate bank, emerging corporates, and business banking. And again, we've seen growth across all of these. On a relative basis, the emerging corporates group grew a little faster than the others, but we've actually seen growth in all the segments of corporate. It's pretty well distributed across industries, so it's not that we've seen a concentrated growth in a few. We have, of course, primarily seen growth in the working capital and medium-term loan kind of business, which is our mainstay. But we've also seen some growth on the term side. Again, it's relatively smaller, but we've certainly seen a bit of a movement there as well. As far as asset quality is concerned, if you look at while the overall numbers have remained in percentage terms fairly stable, we did see some pullback in one or two segments that had shown some vulnerability and some slippages in the last quarter, which was the SME piece and some in the agri piece. Those sort of came off a little in terms of NPAs. Again, agri tends to be seasonal, so this quarter we saw some pullback. SME, there was a great effort on the part of the bank, and we've sort of again reduced some vulnerability there. On the other hand, there was some slippage on the corporate side. So on an overall basis, I guess there was some offset, and the overall asset quality in terms of NPLs remained fairly stable.
Which sector was the slippage from on the corporate side?
There were a couple of sectors. Again, it's not, we're talking about decimal points here, so it's not a large enough move to sort of be concentrated. But yeah, we had a couple of names which we saw some slippage in.
Was there any sale to ARCs in this quarter?
No, we didn't have any sales to success.
And loans bought from HDFC for this quarter?
So for this quarter, we bought 4,799 crores. This was slightly higher than the normal average that we buy every quarter, because if you remember last quarter it was slightly lower, so just a slippage, just a sort of a spillover from what we did not purchase in the last quarter. For the year as a whole, the total purchases of home loans that we had originated was about 12,773 crores, which again reflects a pretty strong growth. So if you look at our home loan book, that has seen a fairly strong growth. Again, on the back, almost in fact 32% growth, because this year, as you're aware, we've bought roughly 70% of what we originate, as against what we were taking earlier, which was about 50-55% till last year.
Could you clarify that number was 7,000?
The purchase for the quarter was 4,799, and for the full year 12,773.
This is in line with the general plan to increase to 75% the loans that you source from HDFC.
So our agreement has always been that we can buy up to 70%. As of now, we certainly have been taking 70%, and I think we'll continue to take the full 70%.
So 12,770 is what you originated or what you bought?
No, what we bought this year.
And so what was the absolute terms, what are the slippages?
The absolute slippages, I don't have it off the cuff, but given the fact that in basis points it's about 3-4 basis points lower, the loan book has grown at 27%. So it will be roughly in line with loan growth on a year-on-year basis.
And on corporate book itself, sir, there have been some news reports stating some new hires and tinkering on the strategy. So if you could just sort of spell out what really the bank is thinking at that.
Sure. No, I don't think there's any tinkering with our strategy. I mean, there's always an ongoing, sort of honing in of our strategy, with in the light of how the environment is and how we see opportunities. As far as our team is concerned, it's been fairly stable. We obviously, from time to time, look to further strengthen the team, in a few cases. In most cases, I guess, in the bank, we've typically grown with only homegrown talent, but once in a while and once in several years, it doesn't hurt to have some fresh talent in. So we've done some beefing up there. But it's I guess, isolated right now. It's just still enough to make news, I guess. So.